Hello and welcome. I'm Alan Thompson, the hardest working realtor in West Volusia, and I'm fortunate enough today to be joined with my friend Tom Fazio. Tom's one of the most caring guys that I know, to be quite honest, and Tom's been gracious enough that he's agreed to join us today and talk about your credit. So, Tom, do you want to tell us a little bit about yourself before we get started?
Sure, I'm with Coast2Coast Lending. I am the loan arranger. That's me, and I've been doing this quite a long time. I've got the experience and know-how. I've been doing it 30 years now, and really love what I do. Love helping people, and want to help them succeed and get in the home of their dreams.
That is awesome, Tom. I really appreciate you joining me today. And I've got a few questions that we commonly hear out here. So I'm going to start with the first one. People are asking, where can I have my credit checked without having a credit inquiry placed on my credit?
Well, there's lots of places you can go, but the most common one probably is Credit Karma. Now, Credit Karma will give people a ballpark feel for what their credit score is. But then when me as the mortgage lender actually pulls their credit, those scores are typically going to be lower than what most people see on Credit Karma. There are at least 8 different credit score models out there, and you might have 3 for the automobile industry, 2 or 3 for the credit card industry, 1 or 2 for the mortgage industry. And people all the time, that kind of upsets them a little bit. Consumers, they go, well, why are there so many? Why does it have to be so different? And that's a great question, and we don't have the answer to that other than they each have their own individualized score models that they use, and we have to abide by them because that's what we're here to do.
So what if I had some collections on my accounts? Should I pay those off before starting the loan process?
That's a really good question. I have people that call me all the time, and on that first phone call, they'll say, hey, Tom, I just paid my collections. I go, wow. And so I'll stop them and ask them, was this a collection that had been reported for years, or is it a collection that was brand new that just came about? And there is a big difference, because collections that are older are gonna, if you go and pay those, what's gonna happen is they can actually lower your credit score. And I can't tell you how many people are very surprised by that, but it's the truth. Now, if it's a collection that was just placed and you paid it off, then there's a good chance that it's gonna help you rather than hurt your score.
Definitely, credit can be a crazy thing. So what if I don't have any credit at all? How long would it take to develop credit to be able to get a mortgage?
Good question. The system that we use, that everybody uses, is going to look for a 12-month payment history. So if they were to call me and I would guide them through the specifics of it, more than we really have time to go into today, it's going to take them 12 months. And with that 12 months, then they're going to see how they have made payments for 12 months and have, as long as they've paid on time, then hopefully we have reached what the system, what the underwriting system calls credit maturity.
Let me ask, I know that the stores are getting ready to run their sales, and I'm pretty sure that Lowe's has some kitchen appliances on sale that I'm really interested in. What happens when I put those on my credit card and my balance goes up?
That's another really good question that a lot of people don't seem to be aware of. So if your balances go up, then what happens is your scores are going to go down. What we're talking here is about the credit utilization ratio. This is not to be confused with the debt to income ratio. Credit utilization ratio is they look at your total lines of credit revolving, and they look at your total balances for that month, and they divide it out, and they come up with a ratio. And that ratio is going to it's going to be a number from 0 to 100. The higher that number is, the more points are taken off of your score for that month. And that can really have an impact depending on where your score is at the time that you get ready to go buy and want to buy a house.
That's some really great information for us, Tom. I appreciate that you've taken the time out to share this with us today. Really thank you for your time. Is there anything else that you would like to share with us about credit that you think everybody needs to know on this video?
Let me think about that for a second.
Maybe there's a lot of things and they just need to reach out to you to talk more about that. How would I get a hold of you if I had further questions?
That's easy. All they have to do is call me. They can call me or text me right on my cell phone, 386-747-8956. Please mention that you saw this video. We like to see where our calls come from. And mention Alan's name, of course. But there's lots of information that I can share with you. And for those that are serious that really want to get this done, I know how to help you.
Hey, thank you guys for joining me too. Thank you, Tom, for your time. And we'll see you guys soon.
All right, y'all take care. Hi, old Silver.
There you go.